Jason, Ray Dalio over at Bridgewater. Bridgewater have been building up a big short position in some Italian lenders, into some Italian energy companies as well. If you had to take a side of the trade, would you be on the Ray Dalio side of the trade, shorting the likes of Italy, or would you be on the other side of the trade and going long Europe in a way that many people told us to over the last year?
Look, Jonathan, I think this is kind of a bit of a mixed story here. On the one hand, you've got better valuations internationally and pretty much majority of international markets than you do in the U.S. So from a long-term perspective, buyers' perspective, there are better investment options there than even domestically. Having said that, if you look around the international markets, the one place that still kind of causes us some concern that we actually haven't gotten to the extreme of really wanting to have a really healthy overweight has been Europe, basically due to the political discord and what that can happen, or what that can cause. The economic story seems to be pretty decent right now. The numbers coming out are actually, I'd say this year, are stronger than we would have thought coming into this year. The earnings numbers are stronger than the U.S. numbers. But then, again, you look abroad a little bit broader, and pretty much everything else looks even better than that. Japan looks better, emerging markets looks better. We're choosing to place our international dollars a little bit more away from Europe. Not to say we don't have some Europe, but we're more heavy-weighted on the Japan and emerging market Asia areas.
Japan Inc.'s got a problem right now. Nissan have been suspending production. The likes of Kobe Steel have got a big issue at the moment as well. Japan Inc., just the mood music around it is ugly. The equity market performance has been brilliant. We're pushing to multi-decade highs, and I just wonder how those two things reconcile.
So I think we're talking about company-specific issues, which if you're investing in Japan in an active way, you can get around. The big picture backdrop, though, if you think about what's going on with Japan, is you have a government that is one-directional. It's stimulative in nature and trying to support and reform the economy. Whereas Europe, you really don't know exactly how it's going to all turn out. You've got Brexit, you've got things happening in Spain, you've got things happening in Italy. Japan's one directional. On the other side, you have a big reform effort that's going on, right? They are ROEs on Japanese companies have come off of what a lot of investors, including myself, got used to seeing just abysmally low returns on equity for businesses, up to what is actually somewhat competitive with Europe, and it's still improving because they're doing the things that you need to do to become shareholder friendly and profit focused.